So for the subject Strategic Cost Management, my report is all about the gross profit variances under Chapter 10 Product Pricing and Gross Profit Variance Analysis. Before talking about gross profit analysis, we need to briefly explain what is gross profit. Gross profit is the difference between net sales and cost of goods sold and is computed as a part of income statement. You may also say that gross profit is affected by at least three major variables: the unit sales price, unit cost price, and the unit sold. For us to get the gross profit analysis, here are some procedures of finding the causes of changes in gross profit percentage. It is from budgeted to actual cost or from one period to another period. Meaning to say, kapag yung given is may budgeted and may actual cost, yun yung term na gagamitin nyo. Pero if walang budgeted or actual cost, don't panic, it's organic. Gagamitin nyo yung one period to another. For example, 2018 and 2019. Yung 2018, siya yung budgeted and yung actual cost is in 2019. So here are some of the terms to help you na mas magets kung paano kunin ang gross profit analysis. Actual unit price is equals to unit sale price this year. Standard unit price is equal to unit sales prices last year. Actual quantity is equal to quantity sold this year, and standard quantity is the quantity sold last year. So, ang actual natin, pag sinabi natin actual, yung sa current year or sa current period, yun yung gagamitin natin. And kapag standard naman, siya yung sa prior year or prior period. Evaluating variances. So, we have two evaluating variances. Yung first one is yung revenues and later on, yung sa expenses. So, paano nga ba natin malalaman kung favorable variance siya or unfavorable? So, sa revenues, malalaman na favorable siya kapag yung actual revenue or yung current revenue for the year is higher than the standard or last year's revenue. And para masabi naman na unfavorable siya, ang actual revenue natin or yung current revenue ay mas mababa kesa nung sa revenue last year. So, pagdating sa expenses, baliktad naman siya. Unfavorable siya kapag mas mataas yung cost natin ngayong year kesa last year. Tapos, kapag magiging favorable lang siya kapag yung actual cost natin this year ay mas mababa kesa sa last year. Then next is the gross profit variances. Under the gross profit variances, may dalawa tayong pinagkukuhanan ng formula. First one is the sources and operational classification of variances or the sales variances. The next one is the price and quantity factor, also known as volume factor. Under naman siya ng price factor. Sa sales variance, ang magkasama ay yung SVP and SQP, tapos CVP and CQP. Sa price variances, ang magkasama ay SPV and CPV for the net price variance, and for the net quantity variance ay yung SQV and the CQV. So for analyzing gross profit variation, we have two-way analysis and the three-way analysis. So for the illustration 1.1, we have basic gross profit variance analysis. So as you can see, we have here unit sold, unit sales price, unit cost price that we will be needing in order to compute for the gross profit. And for yung ginamit natin is from period to period. So from 2018 to 2019. The 2018 is the standard, while the 2019 is the actual cost. So from 22,000, nag-increase siya ng 25,000. So we have an increase of 3,000. So unit sales price from 120 to 110, so it decreases 10 pesos. The next is the 80 pesos to 85 pesos. So, nag-increase siya ng 5 pesos. It is important to identify kung nag-increase or decrease pa siya and yung amount kung gaano kalaki yung in-increase niya at din-decrease niya. Kasi, ayan yung gagamitin natin dun sa shortcut formula na change in quantity times units sold this year, mga ganun. So, it's really important to identify it.
So, the first thing that we will be computing is the gross profit. For us to get the gross profit, we will be determining the sales and the cost of goods sold. For us to compute for the sales, we have units sold times unit sales price, and for the cost of goods sold, we have units sold times unit cost price. So for the year 2018, the unit sold was 22,000 and the unit sales price during that year is 120. So 22,000 times 120 pesos is equal to 2,640,000. Next is the cost of goods sold. For the cost of goods sold, the unit sold for the year is 22,000 times the unit cost price for the year 2018, 80 pesos, and we will be getting 1,760,000. For us to get the gross profit, we will be subtracting 2,640,000 to 1,760,000 to get the gross profit of 880,000. And we will do the same thing for the year 2019. The unit sold for the year 2019 is 25,000 and the unit sales price is 110 and we get 2,750,000. For the cost of goods sold, the unit sold is 25,000 times the unit cost price of 85,000 and we will be getting 2,125,000. Again, to get the gross profit, net sales minus cost of goods sold. So 2,750,000 minus 2,125,000 is 625,000. Just like what we did earlier, we will be determining if it has an increase or decrease for the year 2018 to 2019. So for the sales, from 2018, we have 2,640,000 to 2,750,000. It increases by 110,000. Next is the 1,760,000 to 2,125,000. So, dito, tumaas yung cost of goods sold natin. Ibig sabihin, tumaas yung expense natin and it's a negative thing or a bad thing. So, we have here 365,000 decrease and we will be getting just like what we did to get the gross profit, sales minus cost of goods sold. So 110,000 minus 365,000, we get negative 255,000. So negative 255,000 natin, dapat yan din yung mapalabas natin sa two-way variance analysis natin at saka sa three-way variance. So next is the two-way variance analysis. So here we have the price variances. Under price variances, we will be getting the sales price variance and the cost price variance to get the net price variance. So first, let's go to the sales price variance. We will be using the shortcut formula, which is the change in unit selling price times the unit sold this year. So for the change of unit selling price, we have 10 pesos. It is the 120 pesos for 2018 and then it decreases to 110 pesos during 2019. So we have here the negative sign for the change in unit selling price and then unfavorable siya kasi bumaba yung selling price. So this one, the 25,000 units is the units sold this year, which is 2019. So 10 pesos times 25,000, we will be getting negative 250,000 unfavorable. Next is the cost price variance. To get the cost price variance, we have this formula. Change in the unit cost price times units sold this year. So the unit cost price, the change in unit cost price is 5 pesos. It is from 2018 we have 80 pesos and for 2019 we have 5 pesos. So again, it is unfavorable kasi tumaas yung cost natin, yung expense natin. So 5 pesos times 25,000, we have 125,000 units. And for us to get the net price variance, ipag-a-add lang natin tong dalawa since parehas silang unfavorable and we will be getting 375,000 in negative because mas mataas yung value ni 250,000 kesa kay 125,000. Then let's proceed to quantity variances. Under the quantity variances, we have sales quantity variance and the cost quantity variance. For us to get the sales quantity variance, we have change in quantity times unit selling price last year. So the change in quantity is from 22,000 na sales noong 2018, nag-increase siya ng 3,000 noong 2019. So that is why favorable siya kasi tumaas yung sales natin. So 3,000 times 120 pesos is 360,000 favorable. And then for the cost quantity variance, we have change in quantity times unit cost price last year. So dito, 3,000 unfavorable times 80 pesos. Kaya siya naging unfavorable kasi pagdami ng units sold, pagdami ng pagpaproduce ng unit, pagtaas din natin ng cost. So we have here 80 pesos as unit cost price last year. So 3,000 unfavorable times 80 pesos is 240,000 unfavorable. So since favorable tong isa, yung SQV and yung CQV natin is unfavorable, pagmaminusin natin sila and we will be getting 120,000 favorable. Again, mas mataas yung value ni 360,000 kaya sinunod natin yung favorable. And lastly, to get the gross profit variance, we have 375,000 minus 120,000 favorable. We will be getting, it is a negative 255,000 unfavorable, just like what we had for the gross profit earlier. So next is the three-way analysis. We have the price variances again and the cost and the quantity variances and the joint variances. Under the price variances, we have SPV and CPV. So dito, ang gagamitin naman natin is the unit sold last year, which is 22,000. Unlike kanina na ang ginamit natin ay yung 25,000. So we have a decrease in selling price of 10 pesos unfavorable times 22,000 units. We have 220,000 unfavorable. And dito naman is the increase of 5 pesos unfavorable kasi nga expense ang tumaas times 22,000 units equals 110,000 unfavorable. Since parehas silang unfavorable, we will be adding the 2 and we will be getting a negative 330,000 unfavorable. Next is the quantity variances. Just like yung kanina, same lang sila. For the SQV, we have 3,000 favorable times 120 pesos equals 360,000 favorable. And then for the CQV, we have 3,000 unfavorable times 80 pesos and we will be having 240,000 unfavorable. To get the net quantity variance, we will be subtracting these two and isusunod natin yung favorable or unfavorable sa mas mataas ang value, which is 360,000. And we will be getting 120,000 favorable. For the joint variances, we have the joint sales price quantity variance. Ito naman na formula niya is the change in the unit selling price times the quantity. So we have a decrease of 10 pesos favorable times 3,000 favorable. We will be getting 30,000 unfavorable. For the joint cost price quantity variance, we have the change in the cost price times change in the quantity. So we have here the 5 pesos change unfavorable times 3,000 unit unfavorable. We have here 15,000 unfavorable. So we will be adding these two since parehas silang unfavorable and we will be getting 45,000 unfavorable. And we will be getting the net decrease in gross profit. Ipag-a-add tong 330,000 unfavorable and the 45,000 unfavorable minus 120,000 favorable and we will be getting the 255,000 unfavorable in negative, just like what we got in the gross profit and the two-way analysis.
So the usefulness of gross profit analysis is that the gross profit figure is very important for any businesses and must be closely watched. The gross profit analysis uncover inefficiencies in company's performance during the period and enables management to take remedial action to correct the situation. That's all. Thank you.